Hi, this is Kerry Artag with Wicked Stocks, bringing you your daily Apple report for Monday, March 18th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts. I'm going to start with this image here. It was a couple of weeks ago, moving this chart around. It was a couple of weeks ago that we closed below this former descending channel top that actually held nicely several months ago on the way back down. I had anticipated this possibly containing selling on a monthly or quarterly basis with bullish rotation intact above this formation. But 2 weeks ago, we closed below it. It is a ceiling of resistance. I have it as 172.91 this week. I've reduced it to a minor point just to make way for this former channel bottom at 174.23 all week, which has actually performed just as well in terms of containing buying pressures. I don't want to encourage buying into later week if we happen to close today above 172.91. I think that comes, and when I say later week, it's just for a day or two, and I'll get to that in a minute too. I really want to keep it at 174.23, and the very same formation on the daily chart, by the way, today is 174.07. So this is your sellable resistance into later week. And below the 174.07 to 174.23 region, I am still anticipating this long-term channel support this week at 167.06. And so holding below 174.07 to 174.23, I still maintain a 1 to 2 week downside objective at 167.06. On the way down, we do have 170.73. We slipped below that level on Friday by a bit, about a half a point less, maybe 170.28, and we came popping right back above it. And so it is still there. I think it really is a settlement-based sell signal below 170.73 that would then within a day or two, probably within several days, then yield 167.06. This longer-term channel bottom, this is a weekly chart, able to contain selling through the second quarter, even perhaps through the rest of the year. This is definitely a pullback support zone that can contain longer-term selling pressures. And once tested or above which, we can round back up as we move through the second quarter and into the third. And so that is the big picture. If, on the other hand, we were to close below 167.06, 165.38 is your 1% slippage against that. And that is important because this formation does go back more than 6 months. So if we close Friday 165.38 or lower, that is a sell signal event through the second quarter. I see that as like a 2 to 3, 3 to 5 month sell signal down to 136.21, where Apple could bottom out through the rest of the year. But in terms of the 3 to 5 week to 3 to 5 month time horizon, if we close 165.38 or lower on Friday, no good reason to be long Apple, in my opinion, if those are your trading time frames. And you could, on an intra-week basis, sell a daily settlement below 165.38, but you also want to follow up on Friday with a settlement of the same, below 165.38. Because if we close back above 165.38 on Friday, the clarity of that sell signal is largely diminished. And if we close above 167.06 Friday after closing below that area Monday, Tuesday of this week, which I don't see happening. I don't know why I'm spending so much time here. But if that were the case, you do not want to be short. Bottom line, you don't want to be short Apple if we continue closing above 167.06 and your time horizon is 3 to 5 months out. It's about as simple as that. Let's get back to the day itself. Holding above 170.73 will keep that 174.07 to 174.23 region in reach, which is properly shown here. 174.23 is the same exact formation, but on the weekly chart. An area that can contain weekly buying pressures, and below which, what is at 167.06 on the weekly chart, is 166.97 on the daily chart. 1 to 2 week target remaining below 174.23. Now, if we close today above 174.23, then this trend defining 176.27 is likely tomorrow, Tuesday. 176.27 is a trend defining descending speed line. And I know this gets a little nutty, if you will, but the way I want to frame this is you're selling pullbacks at up to 174.23. Anticipating 167.06, as I've said several times now. And you're buying the market aggressively. I'm talking the 1 to 2 week time frame. You're buying the market over the 1 to 2 week time frame with a settlement above 176.27. Everything then shifts bullish as we move into April trade above 176.27. In fact, 3 to 5 day, 1 to 2 week, and even 3 to 5 week time frames shift bullish with a settlement above 176.27. Until then, those same time frames, at least 3 to 5 days out to 1 to 2 weeks, remains bearish below the 174.07 to 174.23 region. Closing above 174.23 today, sure, that is a sign of, I think you could call that a neutralizing of the 166.97 target, but you cannot ignore 176.27 as a trend-defining speed line that may well contain buying into April trade. And from here, yes, we can fall back within a couple of weeks of testing 176.27, 167.06. So, I don't know your trading style. There is one way to play this where, you're selling the 174 handle resistance and then you're stopping out and reversing altogether with a settlement above 176.27. That is one way to play it. I don't know if your risk management rules allow that. The last thing I want to do is for you to violate any long-standing risk management strategy you've been using for years. But if your risk management strategy does allow that, maybe it requires lightening up on a position or something that would allow it, that otherwise would not. I don't know, whatever the answer may be. But you could sell the 174 handle resistance, anticipating 167.06, and then you're reversing entirely, going long above 176.27. Maybe you're exiting a short position above 174.23, holding off for the settlement above 176.27, and then going long. Then anticipating 187.92 within 3 to 5 weeks of closing above 176.27. I will say that big picture, as we approach this area, and we've yet to test it, but holding above 167.06 does allow full bullish rotation over the next several months, 3 to 5 at the most, back into the low 200 area, this trend line off these highs. And there is another channel top up in this area. So I'm going to say holding above 167.06 over the 3 to 5 month time frame, I have no problem being long Apple in this vicinity if you are a longer term trader or a near term investor. Long above 167.06, anticipating the possibility of the low 200 area as we move into the third quarter of this year. That becomes confirmed with a settlement, by the way, above 187.92 and dropping daily. I think I've said it all. I don't think there's anything else that needs to be said. I'm going to leave it at that for Monday's Apple Report. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of that 5-day free trial. I'll be back tomorrow with Tuesday's Apple Report, and you have a great day.